people think that gold is this so-called safe haven. But if you
Right.
look at the dollar price of gold, let us say over 50 years, it's been an extremely volatile asset. One thing has been that the markets have been becoming very narrow. So it has been mostly tech which has been driving it all. If you go by X or the theories, there are all kinds of conspiracy theories about who's controlling Bitcoin.
Welcome to FO Talks. With me is Devina Mehra. She is the founder and chairperson of First Global. It's a global asset management firm which manages assets of more than $700 million. Devina is also an author, and her best selling book, Money, Myths, and Mantras, cements her reputation as a leading voice in global investing. And that's what we're going to talk about today. Welcome, Devina. Thank you for speaking to Fair Observer.
Thank you for having me.
Okay, so I want to start with how 2026 is going to look like. But for that, I need to give a little picture of 2025. It was a really unpredictable year. We had more wars, we had hotly contested elections, there were government changes all across Latin America. Donald Trump's tariffs really took a toll on the global economy. There is inflation kicking off almost in all the major powers. How do you even begin to make sense of global markets in so much chaos?
Well, I think the common factor in a lot of those things has been Trump and his actions. So I think when he came in a year ago, everybody thought you hold your breath for 4 years and it will pass. But he's changed enough things in 1 year for the world to be a bit topsy turvy. And of course, you are the geopolitical guys. I am not. But the fact is that he's dismantling the old order without your knowing what comes next. So that's really on more macro sense. Markets are different, so markets are not always related to geopolitics. I'll give you an example. 2022 when the Russia-Ukraine conflict started. On that day, I had made a video saying, yes, I mean, if you leave the human cost aside, the part that if you actually look at markets versus geopolitics, and we looked at every upheaval in the last 50 years, US bombing Libya, the two Gulf Wars, Afghanistan, 9/11. There's a lot of turmoil around that situation just before it happened and just after it happened. But 6 months later, 1 year later, the markets have forgotten about it. And it wasn't even a statistical thing because it happened every single time. So, other than the countries actually in conflict, it doesn't really, the markets kind of shrug it off. I'm talking the stock markets and things like that. But of course, Russia, Ukraine, the one thing I said was they're major commodity players. So the direct impact on commodity prices is something else. But otherwise, it is not as if that it will weigh down the world forever. And that's what happened. And the other part, of course, is that wars never end quickly. So just, we are close to 4 years on that. And so also even when adversaries are very mismatched, I mean, who could be more mismatched than the US and Vietnam or Afghanistan? But nothing ends that quickly, but the markets forget about it far quicker. There has been a lot of turmoil, but also, basically the leadership has been in markets has been changing. So Europe has done quite a bit better in 2025, partly because of currency as well. And US in particular and overall markets in general, one thing has been that the markets have been becoming very narrow. So it has been mostly tech which has been driving it all. And within tech, also actually a handful of stocks, what are called the Magnificent Seven in the US. And in 2025, it wasn't even as if that all seven did well. So it was more like three or four stocks driving the entire S&P 500. So last year, if you look at just that, I mean, the S&P 500, 43% or something of the was just these stocks. And in the 23 and 24, it was 60% plus. So the average stock has actually not done that well. And US, it's been outperforming a long time. So at some point, that outperformance had to come to an end. And maybe, I mean, all of the actions of President Trump are kind of hastening the end of that.
Right. Okay, so can you quickly, before I go deeper into this, can you quickly tell us the seven stocks that you were talking about in the US, the tech
Yeah,
stocks?
I mean, the Google, Nvidia, Tesla, Microsoft, that like that they called the Magnificent Seven. So it's not my phrase. So it's like
Right, right.
just just those top seven tech stocks, including Tesla.
Right, but there was also a lot of talk about this AI bubble in the markets. What exactly is that?
Okay, so as far as AI is concerned, I have my concerns, and basically the concern is everybody wants the next big theme, the next big technology that's going to change the world. But the history of the world shows something very interesting that A, you do not know which technology will do that well.
Hmm.
Even if it does well, how long will it take to succeed? Even if it succeeds, which companies succeed? And even if the companies actually get the business, will they make money out of it? So if you look at, there was recently somebody who used to write a technology column who retired after 40 years, and he kind of recapped all the technologies that were launched with great fanfare, or at least some of them, like Google Glass and Apple Car and 3D televisions. And if you remember, Facebook changed its name to Meta because they thought metaverse was the thing in the world, and now we've all forgotten about it. So
Right,
that's one part. The other part is the technology may well succeed, and in 20th century, I mean, what better examples can I give than automobiles and aviation, which is anything, and yet uh, they were a graveyard of companies as far as investors were concerned. They by and large didn't make money. If you look at the internet itself, at the
hmm,
time that 25 years ago, internet was taking off, and people said that everybody in the world will use the net, which came to pass. They said, and you couldn't go wrong investing in companies which are actually laying down the infrastructure for internet. So as you know, the net is carried across the world on undersea cables. So there was this company called Global Crossing, which laid a lot of these undersea cables. We are still using those cables. The company went bankrupt more than 2 decades ago. So AI, that's a concern, that amount of money that uh, it needs for anybody to be in the race
right.
is immense. The people have been hired at like 100 million and $500 million salaries, or a one-person firm being acquired for that kind of sum. You have these data centers being put up, and what are data centers? A lot of land, lot of building, very fast depreciating equipment, and a lot of energy. But is it ever going to make money? During the time that there was school and college holidays, the usage of many of these the AI systems went down by 60-70%. So it's students using it for assignments. They're not a high paying population. Last I saw, OpenAI, even for every incremental user, the losses were going up. So even on the margin, they were not making money. So those
Hmm.
are the concerns. Also, a lot of even debt funding going into it. And a lot of the large companies are not taking the debt onto their books. If you're a Meta or a Microsoft, you are not taking the money onto your books. You are
Hmm.
taking it onto you're asking some small company or even a startup to set up the data center, and that also is getting funded through debt. So those are the concern areas, that whether it might change the world, but is it going to make money?
Right, right. Davina, you and I are both in India, and I want to talk about how India is doing in the global market. So our manufacturing is down, and our FDIs are slowing. Our FIIs are exiting. We've also seen a deficit in our capital accounts for the first time in 2 decades. Yet the narrative is that India is rising and the West is slowing down. Is that really true? Is there really any momentum in India right now, or is this just media hype?
No, I mean, if you go by the numbers, yes, I mean, our real GDP growth is high and higher than most other countries. So those are the numbers. Yes, you are right. The manufacturing as a percentage of GDP is almost the lowest it has been since records began in the 1960s. So
Hmm.
it is about in the 12 to 13.5% range for the last 2 3 years. It used to be 17.5% not so long ago. So about 10 12 years ago, for 5 6 years in a row, we were in that range. Many other industries also where we could have done better. Tourism comes to mind, which is a big employment generator. So we have not yet crossed pre-COVID levels. But yes, the headline GDP number is still good. A lot of it is, of course, coming out of government spending also. But now private consumption has accelerated a bit. especially as inflation came down. So inflation has come down quite a bit. And of course, if you're looking at markets, one important thing I want to point out is that macroeconomics and markets are not the same thing. So
Mm,
oftentimes when
right.
somebody says, if I say I recommend XYZ country, people say, do you think that country is going to do well? That may or may not be the case. I mean, China being the absolute contra example on the extreme that Chinese market made a high in 2007, which it has taken out only, I think, about a year ago or so. In between, its GDP went up six and a half, 7 times, but that high was not crossed. So it can be as extreme as that. So markets are different. Yes, we are growing faster than a lot of countries, but it's still not good enough, for example, to provide enough employment, and or for that matter, for our per capita income to be where we would like it to be.
Right. There's also a lot of talk about the decline of dollars domination. In fact, if you go to social media, especially X, formerly called Twitter, there's so many posts about something called the de-dollarization, and very recently, Chinese President Xi Jinping, he urged countries to adopt the renminbi as the alternative reserve currency of the world. Do you think that that is possible? Do you think there can actually be the so-called de-dollarization in the global financial ecosphere?
So I had made a video on de-dollarization, I think about a year and a half ago, where I said that uh, I think the fears or whatever you want to fear or not of de-dollarization are overdone because reserve currencies don't change that easily.
Hmm.
But I think that pace has accelerated after President Trump has come in because, as I said, he has dismantled the old order. So he's dismantled. US was not just a rich country; it was a rich country which had this reputation of great, institutions, rule of law, free speech, etc. And so many of those things are under question, which means that uh, other countries' whole comfort with the dollar is probably
Hmm.
going down. I don't see, that people will run to the Chinese currency either, because that's like between that's a devil and the deep sea kind of probably worse. So so that's I think of course China is a huge trade partner for many countries. To that extent, they may be comfortable holding Chinese currency, but I don't think it's like really going to be the reserve currency. I think people
Right.
will move to some combination of euro, Swiss franc, Japanese yen, bit of gold, which is also happening. So, but that's going to again be of uh, damage the US in the long term if people turn away from the dollar, or if
Yes.
there is like question mark. I mean, all our school days and college days, it was that risk-free rate in the world is the US Treasury. So if you put a question mark on that, then a lot of assumptions change.
I actually want to come to gold and other minerals later, but I want to talk about digital currencies, especially if we look at Bitcoin, we look at Solara, we look at Ethereum. Do you think they have, the support and the backing to maybe replace the dollar one day?
I'm not of that view. I mean, I'm not of the view that these are not legitimate assets, but I would not say that this is something where you should have a significant portion of your net worth. So they're okay as diversification tools, if you're holding 2%, 5% or in that range, but nothing more than that. And also because even in their limited history, they have been drawdowns, meaning losses from the top of 70 to 85% multiple times. So, I
Hmm.
mean, one function of a currency is if you're using it to price other things, you cannot use it to price something if the currency itself is so volatile. So, how can
Right.
you buy let us say a car price at whatever 50,000 XYZ crypto, but if the crypto price tomorrow is 20% down or 30% up, you can't be repricing your car every day. So, that's the whole point, that you cannot use it. It's a misnomer to call these currencies as such. And also, you don't know who's behind it. There again, if you go by X or the theories, there are all kinds of conspiracy theories about who's controlling Bitcoin and who's controlling, XYZ currency or crypto or whatever. So I don't think, again, we see a big move there. Uh, that will still remain a bit around the edges kind of thing.
Wonderful. Devina, why is gold and silver and other minerals actually, sorry, and metals as well, copper, palladium, why are all of these rising in 2026?
Well, they've been very volatile in 2026. You can't say that they've been only one way rise. You've seen a 1 day move in gold and silver, which were crazy, almost 10% and almost 30% moves
Mhm.
down, and then of course some recovery from there. So what people forget is that people think that gold is this so-called safe haven. But if you
Right.
look at the dollar price of gold, let us say over 50 years, it's been an extremely volatile asset. If you actually calculate the volatility, it is more volatile than equities, which is
Hmm.
something people do not understand. And some time back, I had seen this headline saying gold has not seen such a rally since 1979. And I said, well, let's go forward from 1979. So 1980, gold made a high. And 19 years later, in 1999, it was still down 62% from that 1980 high. It took 27 whole years before it crossed that high, which was in 2007. And nor was this an aberration. From the next high, it fell again 40%. So
Hmm.
that's the nature of the beast. It is a volatile asset. It is not a safe haven. It is useful as a diversification tool in your asset allocation, but it is not something that will only go one way. And only in rupees, the gold chart looks good because it's essentially a rupee depreciation chart. So so there it looks that it never goes down, but because the rupee is depreciating. And our grandmothers were not wrong in buying gold, because at that time you could not invest in any other hard currency asset. Gold was your only option.
Right, right. Davina, very quickly, can you tell us more about your organization, First Global? It's very fascinating how you've built this because it uses both human insight and AI into managing global money.
Right.
So, how does that work?
Okay, so we started on what is called the sell side. So that's the broking and investment banking side. So for the first about 2 decades of the organization, that's we were basically servicing large foreign institutions, and then we moved to asset management around 2015, starting with global asset management, later on adding India PMS also. And the reason why I started the India PMS or our portfolio management services so late, was it as late as 2020, was that I said, let me have something which is consistent, predictable, which gives me some forecastability, because I don't want to take people's money and just manage it based on my whims and fancies, that I like this stock and let me buy this, and not that. So let's have some systematic way of doing it. And artificial intelligence, machine learning gave us that thing. And it is not just because it was available or it is like a fashionable thing to do.
Mhm.
I started when I started equity research in India back in 1993. The profession of security analyst did not exist in India. So I started from there, and I really liked the heat and dust of the 90s. But something fundamental has changed from the 90s, which is that, and this is true not just of India, of all the markets, that back then the real edge was an information edge, that a
Hmm.
Fidelity could sit in a room with an IBM or Procter and Gamble and get differential information.
Hmm.
Now, by law, everywhere information has to be available to everyone. So now the skill set required has changed from getting information to analyzing masses of data and making sense of it, which is where the machines come in. Not only can they look at more securities, globally we look at more than 20,000 securities, they can look at more factors per security. More important, they can do it without human bias and without human randomness.
Hmm.
So that is the edge of the machine, but we still have a human overlay because not everything is captured there. So you need a good human being in terms of how to code the machine, because ultimately it's only a tool. So what do you put into that system? And then even on the system output, we have a human overlay. But the fact is that humans alone are prone to too many errors. One of my favorite authors is Daniel Kahneman, and he's written extensively about all the ways our brain trips us up, and not just in investing, in any kind of decision making.
Right. Davina, what's one trend you're watching in 2026, or you're looking out for in 2026 that could make or break the global market world, like worldwide?
Oh, it doesn't work like that. And risk is always something you didn't see coming. So I mean, going back to 2022, economists is supposed to have this geopolitical radar. In January, they did a story on the 10 or 12 geopolitical hotspots in the world, and Russia Ukraine was missing, which is where the war broke out just the very next month. So I mean, I have no great crystal ball, which is why I mean the systems are required, because human beings are get too married to the stories and narratives in their head. So that's why you need the fact check on, you need the data check. So I am not one of those who says that, I can see the future. I never give index projections either for a year.
Right. Brilliant. Davina, thank you very much for this wonderful interview and for these amazing insights. And thank you for speaking to Fair Observer.
Thank you. A pleasure.
Join the conversation at Fair Observer and subscribe to our YouTube channel.